You're losing trade after trade, and it's not because your strategy sucks or that you're a bad trader. No, you're just missing important levels. Check this out. Price approaches your supply zone, retests it, and you open a short position. Minutes later, price rips through the zone and stops you out. Sounds familiar, right? That's not bad luck though. That's bad context. The zones you're trading with aren't telling you the full story. Let me explain. Most traders make the same mistake. They use one time frame, mark their supply and demand zones, and assume that's all they need. But the truth is, supply and demand is a multi-time frame game. A perfect 15-minute supply zone means nothing if price is entering a 1-hour demand zone at the same time. Higher time frames control lower time frames. That's why so many perfect setups fail. You're only using zones you can see, but you're getting wrecked by the ones you don't. There's an easy fix though. You could just check every single time frame manually. Flip between the 5-minute, 15-minute, 1 hour, 4 hour, daily. Mark out the important zones and then wait on your lower time frame for a setup to form. But let's be honest, no one's doing that consistently. It's slow, it's messy, and by the time you mark your zones, the trade's already gone. That's why we built the multi-time frame supply and demand zones indicator, a tool that automatically scans multiple time frames at once and plots the zones directly on your chart. No switching between time frames, no guessing about the validity of a zone, just clean zones from the time frames you need. Here's exactly what that looks like in action. On the 30-minute chart, this setup looks like a clean short. Price is approaching a supply zone and retests, so you'd probably take a short trade and you'd probably lose. But turn on the 4-hour zones from the settings and suddenly you see the real problem. Price is inside of a 4-hour demand zone at the same time. That short was a trap, and without higher time frame zones, you would have walked right into it. This is how multi-time frame analysis saves you. It stops you from trading isolated setups that have no real edge, because the market doesn't move off one time frame. It moves when multiple time frames align. Let me show you a trade that only worked because of that alignment. Price breaks above a 15-minute supply zone, but instead of chasing the breakout, you wait for price to retrace to the 1-hour demand zone slightly below. That's your entry zone. Price pulls back, taps the 1-hour zone, confirms with bullish price action, and pushes higher. That trade doesn't exist if you're stuck on one time frame. But with multi-time frame zones, you see the full picture. And this is exactly why trading without multi-time frame zones is just guessing. You're reacting to what you see, but you have no idea what's happening above you. Higher time frames act like gravity. They set the direction and boundaries. They decide if your setup even has a chance. And if you're not seeing those zones, you're trading blind. And no, this isn't just theory. The best traders around the world use multiple higher time frames within their strategy, because higher time frames set the bias of whether the market is bullish or bearish. And ignoring these biases will get you wrecked in the long run. So if you're serious about trading and want to start using the bigger market picture to confirm your supply and demand zone setups, then you need this tool. You can get instant access today for 30 days risk-free at fluxcharts.com. There'll also be a link in the description. That's all for this video. Please leave a like, comment, and subscribe if you enjoyed. Thanks for watching, and until next time.